Time for Hot Picks. We're branding this as retail, but it's essentially consumer-facing companies. Our guest has prestige consumer healthcare as her first idea. She says it's a high-margin, high-quality stock. We're joined by Susan Anderson, Managing Director at Canaccord Genuity. Susan, great to see you. Thank you very much indeed for joining us. Remind us what Prestige is all about. As far as I know, they take over orphan brands and rejuvenate them. Tell us why you like the company.
Yeah, Prestige is a great staple-like name. So they play in the over-the-counter OTC space, and they have a portfolio of very niche brands such as Dramamine, NYX. So they have limited competition and private label exposure. Also, the large CPG companies typically don't play in the space as it's just too small. It won't move the needle for them on the revenue line. Instead, those guys typically play in the mega categories such as cough and cold. PBH also has best-in-class EBIT margins in the low 30% range and solid free cash flow, which they've been buying back stock with, and they'll also make some new acquisitions to potentially accelerate growth. The stock has pulled back recently on supply chain issues due to their eye care business, which should be fixed by the back half of this fiscal year. So they just recently bought an eye care manufacturing company in Canada. So they're taking a portion of it in-house to really just limit future issues. So we see this one as a high quality, high margin, staple-like name with solid free cash flow. Their yield's about 9% right now. The stock is currently trading at 13 times next year's numbers versus high teens previously, and 20 times really for those large cap personal care players with usually lower margins. So we think this one's an attractive entry point here on the pullback.
And these are brands that just have been neglected because the big CPG companies, they're just too small, as you say.
They're too small, exactly. So they're very niche-like brands, and typically their usage is every 1 to 3 years, because typically when a consumer has an issue, they'll go with the brand then instead of a private label, which is why there's limited private label competition. That's
interesting. Parfums, I'm not sure if I'm even saying it right. Yes. IPAR, what do they do, and where do you see the attraction?
Yeah, so they play in the fragrance category with most of their products licenses from luxury or lifestyle brand names. So the fragrance category has been seeing very strong sales. It's the better performing category within beauty, which has held up well in itself. But it's still expected to grow mid-single digit in the back half of this year. So I think it sets them up well for continued solid growth. Beauty and fragrance in general typically hold up well, even during weaker macro environments. And, it's been pretty obvious that even recently with high inflation pinching consumers' wallets, they're still prioritizing the category. So we think IPAR is in a good position to benefit from this growth. They have some new launches coming out, such as their own Solferino brand, and then extensions from existing brands such as Ferragamo and DKNY. This should allow them to continue to gain market share and grow above the industry. They do have some exposure to tariffs, but it appears manageable. They're adjusting their supply chain and taking some selective price increases where it makes sense. So, we think the stock's attractive. It also had a recent pullback and now trades at just under 18 times next year's earnings versus 25 times over the past 3 years. So we think this is a very attractive entry point.
And finally, Sally Beauty Holdings. What are they all about? How do they make money?
Yeah, so this one is retail. So it's a beauty company. We think it's kind of a sleepy beauty company, not very well known by investors. They're focused on hair with about 40% coming from coloring and then a total of 80 from both coloring and hair maintenance. They have a pro channel, which caters to the pro customer, and then a retail channel catering to, your everyday consumer. The pro channel sells hair coloring and products to the pro customers, such as salon stylists, at wholesale prices. And then the retail channel sells professional hair coloring and other hair and nail products to retail consumers. So they basically, we kind of call it have a monopoly on the hair coloring category, as they're really one of the few companies out there that offers such a large selection of pro hair coloring. They have been reinvigorating their business. Like I said, it was kind of sleepy up until now, with some new growth opportunities, cost efficiency programs, and store remodels. They're finding new growth through new products, store refreshes, digital tools, acquiring additional pro distribution and going into new product categories such as skincare. And then they're also testing some new store formats, such as their new Happy Beauty Company format. They also have this Fuel for Growth initiative to save $120 million through the next year. So that should help to get their EBIT margins back to double digits. We are estimating about 8.6% this year. So this one's trading, we think a very good value, about 7 times next year's earnings. We think there's opportunity for multiple expansion. Other specialty retailers trade high single digits to low teens. And then also we're expecting high single digit to double digit earnings growth going forward.
Thank you very much. Those were 3 names that we're really not familiar with. Really appreciate it, Susan. Susan Anderson, Managing Director at Canaccord Genuity.